Thank you, everyone. So my name is Angat Sandhu. I'm a principal with Oliver Wyman. We're a management consulting firm that works very closely with fintechs as well as larger financial institutions, helping them with their growth strategies across a range of business models. It's actually my privilege here to facilitate the final session of what's been a fantastic day. Before we hear from the esteemed panel, I'd like to share a short story, basically a sneak peek into what the future may look like. The story is about an individual called Maria. Maria is a millennial who is looking for a house, and we're sort of 10 years into the future in 2026. So I'll just share what happens next. Okay, so 10:30 a.m., one Sunday morning, Maria walks into a real estate agent's booth. She is interested in buying a house. The agent gives her basically a virtual tour of some properties. Being a true millennial, she inspects some of the properties and within a few minutes decides, yes, found what I want and would like to buy it. She looks at her personal financial management app on her watch and says, give me an update of my financials. The app instantaneously tells her what funds she has, some bonds, some in equity, and she decides to liquidate some of the bonds for the deposit for her house. So very quickly, she liquidates $1 million, and for the $3 million property, realizes she needs a $2 million mortgage. Again, goes to her personal financial manager and says, okay, get me a mortgage. The financial manager reminds her that her independent credit rating has expired, and would she like to renew it? To that, she provides the consent to share her personal, financial, and social information. And almost instantaneously, her independent credit rating is updated. Following that, she asks to, given her the size she's looking for, given her risk profile, what are the range of offers, mortgage offers she could get? Again, very, very quickly, there's 5 offers she gets from a range of financial and non-financial institutions. The personal financial manager also gives her a recommendation, which she very kindly accepts. Within seconds, she transfers the money to a custody account, and 20 minutes after walking in, walks away with the key card to her new house, delighted by the experience of purchasing a house. To some, this may seem a far-fetched experience. The personal watch, the financial manager, lots of degree pokery happening. But if you actually dig deeper into some of the elements of Maria's journey, we're actually having many of those elements today. The relentless pursuit of reducing customer hassles and improving customer experience. Here she's bought a house and got the funding approved in 20 minutes. Today, whilst that may seem a bit far-fetched, we are providing funds within minutes for smaller loans. Behind the scenes, there are a range of different providers working together to provide information, all seamlessly and unaware to Maria. There's the bank that's providing the mortgage. There's the credit bureau that's providing the independent rating. There's the data providers from a whole host of sources. There's the financial manager. There's the online aggregator. And even today, we're seeing so many partnerships being formed, perhaps not to the same level of scale, but we're already seeing smaller fintechs partnering with larger banks and vice versa. And that's certainly something I think we'll expect to see much more of. Underlying all of that, technology, data analytics, there's a whole range of issues which are happening and driving that experience. Again, we're seeing those today, perhaps not to the same degree of experience, but certainly something we'll expect to see more and more of as we go into the future. So with that, I would like to actually now sort of get the panel's views on what they see as the future of holding. I know the individuals have been instrumental in sort of playing a role in growing the industry so far. So firstly, if I could ask you all to just very briefly introduce yourselves.
I'm Toby. I'm the co-founder and CEO of Spotcap, an alternative lending platform that we founded in 2014, and we're operational now in Spain, the Netherlands, and of course Australia.
My name is David Goldin. I'm the founder, CEO, and president of Capify. We are an alternative lender for small businesses. We operate in the US since 2002, Canada since 2007, the UK and Australia since 2008.
Noah Breslow, CEO of OnDeck. We launched in the US in 2007, Canada in 2014, and then Australia in November of 2015.
Fantastic, thank you all. So now perhaps starting with yourself. We've seen the industry grow significantly over the last 5 to 10 years. We've seen a large number of participants enter. As we saw in some of the earlier presentations, the volumes in the industry are increasing, the number of segments are increasing. If we sort of forecast 5 years ahead, what would be, from your perspective, how different would the industry be to what it looks like today? And I think importantly, what would be the key drivers of change?
Yeah, so I'll take a stab at it, but again, it's I think prognosticating about the future. If you had asked me if Donald Trump would be a major presidential candidate in America 3 years ago, I'm not sure I would have predicted that one. No, actually, it's funny. Your cartoon or comic strip up there has some of the same themes that I think about quite a bit. So I think if you take the reduction of hassle to its limit, you can do a mortgage in 20 minutes, and that doesn't feel like 10 years away for that kind of an outcome is crazy. And then if you sort of translate that more to the consumer and small business sectors that are kind of a little bit more established in alternative lending, I think this idea of applying for a loan is going to sort of go away, and it's really going to be more of this continuous monitoring of the data flowing through a small business or the data flowing through a consumer, and then credit providers are going to be continuously updating their view on how creditworthy that consumer is. And so when the consumer decides, hey, it's time for me to access capital, it's sort of a foregone conclusion how much capital they're going to be able to access, because lenders have been evaluating you kind of that entire time. And I think you'll see the access to capital not only get even more frictionless, even more kind of real-time updated, but you'll see it integrated into a number of different applications. So maybe I'm inside my MYOB accounting system, and I need to issue an invoice. But I want to factor that invoice right away. That'll be a couple mouse clicks. It won't be some elaborate transaction where you go to a third-party factoring company. So I think the level of integration, the continuous underwriting, the widespread kind of availability of data, all feel very tractable in the next 5 years.
Fantastic. David, any thoughts from yourself on that?
Sure. So I agree with a lot of the points that Noah's stating as far as the longer time goes on and the more penetration, acceptability, and especially speaking from the SME borrower side. I think a lot of the technology is actually here today, and it's really a question of, yes, there's always data sources that can be improved upon, but at least what we've found is that a lot of the SME owners aren't ready for it yet. Until they really understand the brand and until it's a brand they're comfortable with, they still want to first speak to, at least our findings have been in the Australian market, they still want to speak to a human first before going right onto a screen or a computer and perhaps giving out their bank login information or giving out their personal credentials. So I think it's going to be sort of matching up the right timing of the technology is pretty much there. The data can always improve. It's really getting the acceptability from the SME owner and feeling more comfortable to get more and more into that automation process, especially if it's coming from a smaller company or a non-established brand such as a big bank, of being comfortable giving that information out.
Fantastic. Any thoughts, Toby?
I mean, I also agree with both David and Noah. What I would add is, I think what will change, and that is very much underway, but depending on the country in question, is limited today, and that's awareness. It's the small business owner that is aware of sort of online lending. If I look at a market such as the US and the UK, they're a little bit more advanced, or where alternative lending has been around for longer. A small business owner knows where to go to if he or she can't get funding from a bank, or just knows that funding is available quickly from online lenders. What we have in many other countries, including some of the ones that Spotcap operates, foremost Spain, the Netherlands, and Australia, is that alternative lending or online lenders are simply not known. And I think it's the level of awareness needs to be raised, and you also asked what we need to do to get there, and I think that's to some extent sort of a little bit events like today, bringing everyone together, thinking about how we can collectively increase awareness. That's not just our jobs in client acquisition strategy, but it's also finding a regulatory framework that does some of that marketing, some of that free marketing, and building trust and credibility that is so important in the financial services industry.
Thank you. You've touched on a number of points that I'd like to get your thoughts on a bit more. So maybe start with partnerships. I think one of the things that, if you do believe with some version of that future, is that there's a lot of entities that are working together, behind the scenes, seamlessly to really improve the customer experience. And each has sort of their own core competency. There's almost a view that, in the future, the concept of basically a one-stop shop may not exist, and different organizations will have to partner with different providers, either for scale or for access or for underwriting capability or whatever else. And I know many of your organizations, you've sort of engaged in partnerships for a whole host of reasons. I mean, how important do you think are, sort of partnerships going to be for this industry to grow in the future? Do you think the nature of the partnerships will evolve from just getting distribution access to customers to a whole host of other capabilities? Perhaps.
I'll take that one first, if you don't mind. So if you really break this business down, whether you're in the consumer side or the SME side, it really comes down to three elements. Your cost of capital, your default rates, and your cost to acquire the customer. And one of the things that we're seeing in the US, if you plot the trend, is the cost to acquire the customer has increased dramatically over the last few years. And I think a key way that's really beneficial, multifaceted beneficial for a platform, especially in an emerging market for this like Australia, is partnering with companies when we're talking about the marketing partnerships that can help lower the cost to acquire the customer. And it benefits in a couple of different ways. One, it's more beneficial for the platform, but it can also be more beneficial for the end user, whether it's the consumer or the SME that's borrowing, because a lot of times alternative lenders may have to price not just the risk, but also price the acquisition cost in the end product. So if there's a lot less acquisition cost or nominal acquisition cost, not only is it better for the actual platform itself, but the end user may benefit from that as well.
Absolutely. One related point I'd be good to get your thoughts on is basically one of the other key elements that sort of shapes the nature at which the industry grows, the pace at which it grows, is sort of the regulatory environment. And we heard in one of the earlier sessions around how policy is shaping up here. I'd sort of welcome your thoughts, given that you've, I guess, grown businesses in other markets. How does the sort of regulatory and policy environment in Australia need to evolve to foster the same level of growth?
I can take a cut at it. I think the regulatory environment is extremely important. So we're all in the SME space. The SME space has largely been less regulated than the consumer space. And on one level, that's a good thing for innovation. You can set up a company relatively easily. You can get into the market. You can try different techniques of underwriting, of acquiring customers. On the flip side, consumer lending is a little bit more regulated. But in some ways, that regulation puts some standards around the industry and can create some barriers to entry. I think the UK is probably the furthest along in regulating marketplace lending at this point. And what's nice about if you're operating in the UK, I think, is you're able to say the regulatory question is somewhat answered. And I think in the US and probably in Australia as well, the regulatory question is not answered yet. And it remains, I think, a little bit of an overhang over the entire industry. So in some ways, getting that regulatory question kind of straightened out, answered, and clear for all the market participants. It's a level playing field. It'll apply to everyone equally. We'll all have to adjust to whatever that regulatory standard is. But not knowing, I think, creates a little bit of a burden or overhang on the industry that hopefully will go away in the next couple of years. So in some ways, I'm looking forward to regulation, which is a crazy thing to say, but it'll at least sort of put us on a clearer level playing field going forward.
Fantastic.
Yeah, we're also very big supporters of regulation in general, and we've seen it in the UK, which definitely is sort of the way to go. And when I look at continental Europe, for example, which is miles away from the UK, everyone there is looking at the UK model. And in fact, we're lobbying both in Spain and the Netherlands for increased regulation, and it will come, and it will come in a form that will probably in some ways be similar to what the UK has done. And not only will regulation create awareness and add credibility and trust for the small businesses, it will also help in acquiring clients. lowering the cost of acquisitions. In the UK, you've got the bank referral scheme where, banks by law, come April, need to refer a small business owner that they don't want to or can't service. So, and they need to refer them to an online lender, and that is great news for the small business that may or may not be aware of online lenders, and that's obviously also good for online lenders themselves.
Thanks. So, in a related vein, one of the key questions that's raised by commentators around the sustainability of these businesses is, well, should the macroeconomic environment change or worsen, or interest rates significantly increase? There's sort of fairly binary views in terms of what that means for the sector. I mean, you as business owners, you've grown these businesses in many markets. Some environments have been tough. How do you sort of adjust your business models? How do you sort of think about that as you sort of make business decisions and try and grow the business? David, perhaps.
Sure. So we've experienced the downturn, obviously, in the U.S. From 07, 09, obviously, when we first started in the markets in Australia and the UK. And we look at that as a competitive advantage as far as experiencing it, because we know how to operate in it. And we say this all the time, or anyone can fund, anyone can originate. The real talent is collecting the money back. And it's even more challenging in a down economy. So I think the one thing they have to be careful about, whether you're an investor or think about opening up a platform, is unless you have that experience of a down economy and knowing how to be disciplined with your underwriting, the one challenge could be is if whether a recession's coming today, tomorrow, 5 years from now, the general sentiment globally is things are going to get worse before they get better. So I think, at least I know at Capify, we're already starting to prepare for that as far as possibly modifying certain underwriting policies where it's certain industries that we change the criteria on based on what's happening in the economy. For example, if there's a slowdown in China, and obviously we get a lot of SMEs in the Australian market that sell into China, obviously we have to look at those deals a lot more differently now than we may have 3 or 4 years ago. So I think the key word is discipline. I know all of us up here, we all want to grow our platform and our origination volumes, but it could also work against you very quickly if defaults get up to an unmanageable or unacceptable level from investors, because all the interest in the room today could quickly go away.
Fantastic. So let's assume a more positive scenario. So we're in a relatively benign macro environment. The regulation is compatible and supporting growth. What would it take from your perspective, or what would you do from a strategy perspective to really continue the exponential growth that we saw in the Australian market over the last few years? Is it about new products? Is it about new segments? Is it about continuous investments in technology? Something else? Perhaps if each of you could offer your thoughts there. Toby?
I think we're still at the very beginning of what we're seeing in Australia. I mean, if you look at sort of market share compared to potential market share, it is completely insignificant today. So, it's way too early to talk about real, even competition, because it's, the market share of each of the participants is so tiny, and continuously investing in your platform on the technology side, on the acquisition side, clearly will help, but the opportunity is there for us to grab.
Okay. Our strategy has always been is really establishing best practices from our different markets that we've been in. There's always differences between markets, but there's really not one single answer of what's going to accomplish that. It's a combination of additional products, technology. As I said before, I think a lot of the technology is ahead of where a lot of the, at least I could speak in the SME world, the business owner world, a lot of the technology is sometimes ahead of the comfort level of the business owner using it today. So you just can't snap your fingers, as my CTO will tell me every day of the week, that technology just doesn't appear. You have to make that investment. It's a very expensive investment. It takes years to get it going. And while the end user, the majority of them may or may not be ready for today, the way you're going to grow is the user adoption rate will get greater and greater, literally month after month. And as there's more awareness about our industry, you have to be there. You would not be able to compete if you first started building out technology when you could say it's reached mass critical acceptance.
Yeah, and I first off, I agree with Toby on that. The awareness level in Australia is extremely low, and the research we did before we came to the market sort of supported the fact that most Australian small business owners haven't heard of online finance. It reminds me a lot of where we were in the U.S., back in kind of the mid 2000s. So I think job one to getting the exponential growth is getting the awareness level up. Like when we started OnDeck, most of our customers had a negative experience with the bank and then came to us afterwards. Today, the majority of our customers apply to us first. So see that behavioral switch from sort of not considering online to being aware of online to choosing online before you choose a bank, I think that's sort of step one. And then I think the second part of the exponential growth comes from really following your customers. So how can we come up with products and solutions for them where instead of just serving them for a year or two, we can have products that are evergreen. For example, we have a line of credit product in the U.S. that's designed to last for 5 or 10 years with a business owner. I think making those relationships more long-term in nature with the business owner, coming up with additional financing products that solve other pain points they have is critical, I think, for the long-term growth of the industry.
Fantastic. I certainly share the optimism, as I'm sure do all the participants here today. I know we've run out of time, and I know I'm standing between alcohol and more Q&A, as much as I'd love to carry on. So listen, thank you everyone for your time. Please put a round of hands together for the panel.
Thank you very much.